Morning, everybody. This is Carlos from Omega Blues Trend with another forecast video for today. So I'm gonna get the things rolling. I'm just giving a, t- a go at a couple of ideas going into the pre-market. So let's get right into it. Right at the bat, I'm gonna start off on a 50-minute chart. I'm gonna hide everything here, and this is kind of what we have in front of us. So it's quite um, simple to understand what to expect from the market as we see it fit. So the first things that we need to layer in is right of what we see in the chart is there is what we call a head and shoulder formation. So head and shoulder basically is what it means. These are the shoulders, right? And this is the head, which is kind of provided by a higher level. This is what many other calls liquidity, where the market pretty much are going to have a lot of issues with it because it's a trap against buyers where sellers start pushing through and the market basically continue further down, right? So, that's when people try to like to complicate things a little bit in terms of naming shit and whatever and whatnot. So, but in reality, what we need to address at this point is the fact that the market is just having a lot of issues going through it. And good old fashioned technique, it would be kind of these use kind of the head and shoulder formation, which is a potential of indication of a potential impending selling in the bigger time frames. Now the neckline is right at the bottom, right? And that could be kind of the idea of it. That's the the base of it on how they teach this back in the day. This is old school stuff, but in retrospect, basically, I like to go and granular identify other levels, right? So I can see here an important swing low, which matches up with this one right there. So I can utilize those level layers and have it more clear understanding that if they break this barrier, it could be either the first layer of intentions that the market is going to continue further down. That's one thing. And number two, I give you kind of a poke in the shoulder, letting you know what's about to happen, or giving you the opportunity to jump on board a little bit earlier. And if you follow the strict rules of the strategic structure itself, the stop is going to be on the other side of this area right there. So anywhere above that or above the last one of the last shoulders right in there. So this is kind of a simplified format of it, right? And then you can measure the width of the head and shoulder, right? Like so, and whatever the distance of that, it's going to be kind of what they're going to be moving all the way down, or they break above the upper hand. That's how much is going to move into again to the upper side of things. Once again, this is just plain and simple simplifying things for everybody to understand the expectancy. So the question is, does that mean that they're not going to move higher? No, that's not what it means. It means that based on the pattern, it is a potential recognition of what's possible to happen. However, we go a little bit more granular, and this now me looking at the whole perspective. The market is in a bullish outlook. So yes, I see a lot of potential intention of the market having a lot of issues breaking free, which is an impending format of a potential reversal. However, in the context of what we're seeing, the market broke this important swing high right there. That's an impulse move on the way up. The market came down. There is a possibility based on Elliott wave pattern tendency that they should continue further higher. That's another thing to look at it, right? And if that's the case, this could be an Elliott wave one because this is an impulse move. And for those of you who don't remember about Elliott waves, the Elliott waves is a pattern of recognition where the market moves in cycles, right? And they move in um, impulse move cycle, corrective cycle, and there's a pattern that we would like to focus on. And the way that it is an impulse move up with a B, C, or 1, 2, 3 corrective cycle, followed by an impulse move, another corrective cycle, another impulse move until they complete 5 cycles in totals or 5 waves, indicating the first impulse move, indicating the wave number one, corrective two, impulse number three, corrective four, impulse number five. If that's the case, if we try to analyze what we're seeing here and what we got in the chart right here, we can identify an impulse move right in here. Now the question is, wait, but is that one? Is it two? It doesn't matter, right? If it is one impulse move, one, three, or five, at this point, it really doesn't matter for the fact of the following. um, I need to know where I'm at in the price structure right in here. And based on what I'm seeing, all I can identify in my mind to simplify things. All right, so it's coming from an impulse move, and this is an ABC structure. This must be an impulse move on. So this guys must push through, right? Based on the pattern, right? Does that make sense? So that's all there is to it. Don't overcomplicate things, because the more granular you want to go into it, it's the worst, right? And what I'm teaching right now and explaining to you right now is to see the big picture. I'm not talking day trading, scalping trading, reverse trading, gap trading, over whatever. That is not the purpose of the structure of this video. So now you want to find more information about what's going on, then you push back a little bit. And now it's even clearer, right? The beautiful part is that, hey, the sequence moves in cycles, right? So it's a five-wave cycle, and impulse move tends to relate themselves. They look similar to themselves. Can we identify here something interesting, right? If you pay attention to what we see, we have an impulse move here, and we also have an impulse move here. Does that make sense? Is repeating the process, and right after it, the market just become unstable, right? And right after, the market just become unstable. You see the pattern going on? And then if I've seen this, I'm saying, okay, so it looks like an impulse move, and there is an ABC structure, right? So that means impulse move right over here. There is like an ABC structure, impulse move. All right, got it. ABC structure, impulse move. You see where I'm going with this? So there is a possibility, right? Based on what I'm seeing, this could be the last straw of an intent for the market or whatever's left, right? So we identify a pattern. We kind of know what to expect. And the market is binary in nature. It's either going to go up or down, guys. It's not going to go in sideways all forever, right? So in other words, these are the two cycles that we have, and these are the two spectrums of what we're looking for. So if that is the case in this specific process, how can we tackle this? How can we move forward with this? The first thing is you're going to assume there is a highly chance or probability that they will finish a cycle, because this is wave impulse move 1, corrective session 2, impulse 3, corrective session 4, impulse move 5. You need to think the completion of the cycle, unless this is a fifth wave, which I might doubt, but it could be. So all you have to do is zoom back, and long and behold, you can say, wait a minute. Yeah, that might be the fifth wave up. Does that make sense? Because this could be kind of a whole, you see the sideway going on in here, right in here. And followed by that, there is a massive impulse move right there. So it's overextended, right? I'm on a 15-minute chart. So this means definitely that the market is finding itself an overbought condition. There hasn't been a decent correction. If we clear everything off from it and we zoom out completely so that you can have context of clarity, this is a massive move without yet a decent pullback. And what do you mean by decent pullback? I'll show you. You see this massive move on the way down right here? This is a healthy trend down. Why? Because as the market collapsed, right, the market provided decent amount of pullbacks multiple times before finishing at the end, where they were cleared out, and they started to move up without a decent size of a pullback. Does that make sense? This right here, friends, it's questionable. The market never moves in a single oscillation without going into the multiple arrays of pullbacks before moving on. And this, for me, is a warning signal that is more driven by greed than a healthy market structure. So for me, as fast as they move up, it could collapse equally fast down. I'm not saying it's going to happen. I'm just identifying a warning structure that I don't see. And you can, again, for the context of this training, hopefully you understand. I'm not teaching you how to trade. I'm teaching you how to predict. Okay, at least the way that I'm seeing it. This is compare the movements here versus the movement on the structure here. You understand what I'm saying? So this is, again, a ticking time bomb in terms of expectations of a massive correction. But to get me wrong, it could be, hey, this could be the first move or first wave of something even bigger, right? If we move to a 4-hour chart, right? It can be more clear at this point. Look at this move on the way up. Nice pullback, move up, nice pullback, move up. Let's just go further back. All the move up, right? Let's see all this move up. You see, move up, pull back, move up, pull back, move up, nice pullback, nice pullback, nice pullback, nice pullback, nice pullback. Where do you find that in here? There's none. Does that make sense? You see this move up, nice pullback. So now I'm on a 4-hour chart. I'm going to take some logics here and try to identify, all right, so what has the market done before that is calling my attention? And we can go back and clearly identify, you see the massive multiple intentions in this area structure, right? Resistance, support, resistance, resistance, right? Support right in there. This is support turning to resistance, 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 and resistance, right? This is the key. So again, look what's happened in the past every time this area has been trying to be tempered with multiple times, right? Massive corrections right after it multiple times. You add this up with the fact that the market hasn't done a pullback yet. Again, it's questionable for me, right? These are going to keep pushing further higher. They might. Again, there's other areas in these regions, even up all the way up here, right? All this left is runway left before a potential impending correction. And this is what we need to pay attention to. So now that we know what to possibly expect for whatever's left of the week, we can just clearly say, okay, now that I know that I'm what I'm aware of, I can go back and start and be more strategic about what to expect. So now back to a 50-minute chart, it will make a little bit more sense for me, right? To identify the potential move of the market, or whatever it is that is left right now. So this just brings in the idea for the fact that we are tackling this prior swing highs and swing lows. And one of the things that you can do, you can take the tops, bottoms. We call this trifectas. So at least a point in the past that has touched at least 3 times, right? So the lower would be I'm going to take all the highest swings. I want to identify at least 3 higher swings and the lowest of the 3 that intersect with all of them. So we got, this is the highest, and below that we got this one, and below this one we got that one. That could be what I call the trifecta point, right? So that's, I just want to know where those, with that price in the past has identified itself as a massive resistance point that it intersect at least 3 times in the future. Does that make sense? So that's the way that it is. And then I can overlap that with the highest level. So we got this high that was left here. We go back, we got that high in there, and I'm overlapping everything in the top. So now I have a clear understanding of a problematic zone. So as I move forward in time into the upper side, upper ground, these are layers that I'm going to be looking at a potential rejection or reversal zone based on price structure. we can do a lot of things with this afterwards, right? We can just drop down to a 15-minute chart, and then now you can bring all your bells and whistles. You can say, oh, this is liquidity, or this is a fake out, or maybe you can bring Fibonacci stuff and identify on bigger time frames that that level might transcend into something else, right? You can do your fibs, um, bring the idea and overlapping. Oh, they're overlapping on a 61.8 right there. Beautiful. That's another thing that you can do. You see where I'm going with this? And then you overlapping and the idea. This is an area of highly correlated potential resistance point where the market must stop for a dime and pull back a little bit, take a little bit of a breather to continue further higher. And that hasn't happened in this massive run on the last 2 weeks straight up. So, although as beautiful as it is that we are expecting the market to continue further higher, so that all of our 401ks are massively beautiful, we all want that. My concern is the fact that they need to take a step back to push further higher, and we haven't seen that yet. All right, so that's all there is to it. So now is okay. So now that we have an idea, we got a structure, we got an idea concept of what to expect. Let's just move on into what to expect on this morning. And this morning, I have this conglomerate of highs, multiple swing highs right there. Market is again right now as we speak. It's 849. It's pushing further higher, and now we're expecting that to move further on the way down, right? So if that's the case, that's great. We are going to expect that movement. If you already know how to use the triangle formation thing, right, or where we show you how to identify correlations into the future, you can identify the fact that this was a broken structure. At that point, you take the information from this width or that width and project it into the future, and you will have a potential 40, 60, 100, and so on and so forth rejection points, which at this point, by the way that I'm looking at it, we're reaching probably one of those 40s, right? That's another way to do it. The next thing is that I understand there is kind of a gap here going on. Not a gap, it's a range. I'm sorry. I noticed this high, this multiple same lows. You see that repeat themselves right in there. That's kind of a range bound area that they have formed right since yesterday. So that's another key factor. So if I'm going to be a buyer, do you think this is going to be a structure for me to become a buyer? No, it is not. We already identified this in the past. This is a problematic area. That's a trifecta point, which also brings in of pattern recognitions, order blocks, and rejection points. You call it whatever you want, right? You add that up into the layer, put it on the blender, makes you sound and more confident in what you're looking for. Okay, so the way that I like to work based on when I was an intern for the hedge fund on the analytical department was to identify zones. They did not. They forbid us to identify pain points. That's me being a nerd on this world, and that's where my career turns to be kind of good one. But anyway, it's about zones. It's not about pinpointing levels. There's a difference because for us day traders, pinpointing levels, we're being very good at it, but that works for a purpose. For big players, right? The whales, the smart money, that is a losing game, right? You're gonna miss trades. It's just again, it's areas. They do not care about specifics. They got ranges, areas, which brings me to the introduction of what we built recently, which is a tool that produce and provide all the levels and combine both of the best worlds. Does that make sense? So I like to identify specific layers or levels to the upside, and I like to see them plotting in for me because that's what I do. I'm a price action analyst. I'll use Elliott wave patterns recognition on the structures of market combined with highly aggressive Fibonacci analysis. But that is kind of a nuance, right? It takes about a really good 30 minutes for one chart to be completely laid out in full blueprint up and down. And long story short, we were able to tackle that by creating a tool that shows everything as it unfolds, right? I'm going to show it to you. So they're called smart money levels, and I'm going to label them here. And this is the first version of it. So I want you to see the zones, right? So these are ranges. These are the zones. So this is this range right here. That is a yellow one. I just put it a little bit thicker and brighter. Represent the opening range of the London market. And notice how the market is being hovering back and forth right in the middle of it. Indicative of what? Of what I just explained, right? Unbiased market tendency. It's quite difficult. And then this overlap here is the one at 8 o'clock. So we got an 8 o'clock. And notice that now we have an overlap of both of them right here, making this kind of a thicker zone. And also, that's a previous day close. That overlaps with the 8 o'clock. This is absolutely great. Knowing the fact that the market tends to go and gravitate to close the gap, which is going to happen, right? In the next probably 40 minutes, when the market opens, we're going to open up on a gap, right? And although our tool, Omega Boost Trend, allows you and tells you how much the gap is going to be, here you can say, okay, so far we're going to be opening about 15 points of a gap up. So we're above that, indicating the market must come back to it to try to push through, or must come back, press through it to finally say, we're done with this upward movement, started to come all the way down, and I'll go all the way down. Does that make sense? So to show you the validity of how this looks, I'm going to bring yesterday's market activity. Let me bring it in, and we have an issues here. Let me show you how this looks. It's overlapping once this, because it's just calculating from 9:30 until 4. Once 4 is finished, notice here that the plots stop canceling into the future, just overlap to the very next session right here. Okay, just want you to see it. And it's kind of annoying when you're going back and you see all these lines, you can see clearly. But all you need to pay attention is from the 9:30 until 4, everything just laid out perfectly. We're probably going to try to fix that, but a workaround here or around this, it's easy. You just kind of come back and forth, right? You just kind of go back and forth on the time frame and reset itself up, where the only thing that you're looking at right now is the starting point of the levels, and that way it doesn't overlap with the 4 o'clock on the previous day, and that way you don't see that. Anyway, back into this was yesterday, and notice here there's a London open market open. Notice how massively beautiful the London Open structure use opening range as a strong support. Then the 8 o'clock open, you don't need to have them, to be quite honest with you, but it's very beneficial to see them, see those opening ranges. And the thing is, when I see both ranges kind of overlapping almost close to each other, imagine that's kind of a big, huge zone, like so. And I'll show you in the moment. I'm going to paint it in here, the overlap of these two, because they're closer to each other versus this one. And notice how prices tend to react. Once they broke through it, they went straight through to the next zone, and so on and so forth, and came back right into the zones, right, and finished the day. Now, notice the levels. Here's a kicker. As the market open and start providing you with, let me delete that for a moment, the blue zone right there. I'm going to turn off. I'm going to go into styles right at the bottom. I'm going to turn these zones off, right? And leave only the one that pertain to the 9:30. This is what you're going to encounter basically every day. Okay. So you're going to see here that as 9:30 opens, it's going to provide you with the calculations and start plotting very small, but you will start seeing plotting the zone. As you're going to see how that looks in a moment. And it will automatically calculate those horizontal potential targets to the upside, which are massive. 11 of them to the beyond to the upside, and 11 of them beyond to the downside. So the key factor here, you want to aim for, right, above the zone, you want to aim for the thick green line on the top or thick red line at the bottom. That's what I call the swing state of the session. right? That's what we're aiming for, to max out. And there will be days where those are going to be broken, reason why we kept adding more and more to the upside. However, the main objective for pertaining of our state of intent is going to be from the zone. It's going to be the green one right here and the blue one. Those are the two that you most likely will see the prices hit and then massively see a correction from it, right? Over and over. But that will be not necessarily for you, because on average, from the zone to those area, we have over 85, in this case 50, 60 pointer, and we are only looking on an average of 7 to 15 point max and be done. And if we do, the calculations here, this one move about 24 points and about 16, 15 points to the first layer there. That will suffice to give you the daily objective and you'll be done. Okay. So the beautiful part is all of this is calculated automatically for us. We don't need to think. We don't need to do anything behind it. It's just there. And lastly, you see the big purple one at the bottom. This is what we call the weekly opening range. Technically speaking, the prices, if they hover above it throughout the week, smart money tends to push through in that direction, or the other way around. Notice that as the market opened on Sunday, then Monday came in. Monday tried to push through and they went down and faded at the bottom. Then report came out of the Feds. The market, as soon as they broke above that opening range of the Sunday smart money levels, smart money intentions, look how the market hovered right on top of it, tested, and blast off from it. Okay. And I'm not going to go into the route of the power of these levels that much, but you can see previous week prices open above that weekly zone and the market blast of 800 and something point. And this week alone so far, right? It hovered and faded multiple times again because the market overextended itself. It tried to correct and it didn't. And then report came out and held the market move an additional 222 points. And that's where we're at this point, that we were talking about the fact that we're kind of seeing a structure here on the bigger idea of a impending reversal pattern called head and shoulders. Okay. So this is where we're at this point, and I want you to see how powerful this looks and how powerful these things are. Let me move this back. I'm sorry. And now we're going to have the opportunity to capitalize on this. And again, don't be overwhelmed by the lines. You're going to switch to a 3-minute, right? Preferably a 2-minute. If you're going to do a candlestick, switch to candlesticks. And this is how it looked, right? So notice here, market tested once, came back into the zone, tested one, came back into the zone. Once we cleared out the zone, then off we go to the first target, second target, third target, fourth target, back into the zone. It's pretty powerful stuff. When you combine this with our order flow, it just magically provide you with the opportunities. We're going to do a more in-depth training later on this, but based for the state of today's market activity, I just wanted to introduce you to these bad boys coming out today. But today, all we have to do is, again, I'm guesstimating that the prices are going to have a little bit of a hardcore time moving further higher. And this area, right, that we already shaded before using the trifecta zone area, it's just showing a possible impending area to short the market or see reaction in the market against it. So one key factor for us to capitalize on top of this, it would be, again, as the market opened at 9:30, you will expect the market to drop down to correct towards the closing of the gap, which is about 11 points as we speak. It's going to be different by 9:30. And if we break below the previous day close, potential intention means that the market most likely is going to start doing a massive correction on the way down. Okay, that's all there is to it. And I will be introducing to you guys with the smart money levels soon. And just to give you kind of a context of an idea, I'm going to enable the zones for the 8:30 and 3 o'clock. I'm going to go to style, going to just turn them on. And now I have an idea what is the important layer of those zones. Does that make sense? So now I know I'm going to be caught up between this zone at the top, this zone at the bottom. I'm in just clearly I can see this is going to be kind of a difficulty one. And it's going to be very a tight range. It's unbiased. The market is just having so much hard time, right? And if I switch here to the starting point, I'm going to put here 8, which is 903 right now. You will see the lines starting to plot. So this purple, there's going to be a blue one that calculates at 8:30, and then the calculations of the targets for us. And there they are. All right, let me just switch back to 3 minute, and there it is. This is how it looks if I were to use the 8:30 mark as my opening range and the projected levels to the top side, projected levels to the downside. And right off the bat, I can clearly understand where I'm at. There is a line right inside of that layer on top of it. This could be a great selling point or pricing, waiting for the prices to hit it. And if they clear it out and I have a quantum flow signal to go short, right, I might take it. But preferably, I would like to short anything below the close, right? And I notice they touched that area that we talked about back into the opening range of assumption that I'm using the 8:30 mark. And if they break below the low of the zone, which happens to also be the previous day close, isn't that amazing? Now I can call this kind of a potential reversal on the way down. And now that I have this, look at what's going to happen. And I'm going to leave you with this. There is an overlap between the high of the opening range of 8, the low of the zone that just plot at 8:30, the previous day close, and the high of the opening range of the 3 o'clock. That area right there, that it's between the 8750 and 8375 is going to be a key factor for me to utilize as a starting point at 9:30, and I'm going to use that as a gauge of where am I should be looking for to move. Prices come back to it, and if they bounce from it, I know for a fact the intentions are to try to go further higher. If they're below of it, then I'm going to aim on the way down below of it. Okay, and again, I'm aiming for the thick blue line, green line, blue line on the way down. And in between, we got a couple other targets, but you only need to pick whatever works for you. Okay. I'm going to bring this back on and I'm going to label it at 9:30 because that's the one that I'm going to wait for. And there it's gone because 9:30 is not here yet. Okay. So state of the market today for me, again, to conclude, which is the whole point, massive resistance points, multiple iterations of fake outs on the top, a bearish outlook pattern called head and shoulder. It's at stake here, and the market is being extremely overbought. Although we move higher, we play higher. We're going to use the OT for that, but with a lot of warnings, understanding that we are in extreme overbought conditions territory, and any impending resistance point can be the end of it to start collapsing on the way down. Hope you enjoyed this video. I know it's a long one. It's a kind of a training pre-market analysis, and let me know what you think. Cheers.